Joining us right now in a rare interview is Andy Sieg. He is the president of Merrill Lynch Wealth Management, and good to see you.
Great to be here. Thank you.
Let's talk about the trend that Mike was just talking about. Is the trend your friend here, or do you worry that things have run so far so fast?
Well, we think the trend's your friend. We're very bullish on the market right now, and I think it's for reasons we've been talking about all morning on the show. It's the economy, earnings, and the Fed. But one of the things we have insight to through our 15,000 financial advisors is just what's the sentiment among Main Street investors today. And the sentiment's very encouraging because investors largely are wary of markets, but they're very optimistic about their own business. And so we find clients that are in the market are a little concerned. Those that are on the sidelines are not yet really ready to put cash at work. And so what that says to us is we're probably more mid-cycle in terms of this bull market and expansion.
Well, that's been really interesting. The Wall Street Journal and other places have reported recently about how investors have actually taken a lot of money out of stock mutual funds. That's something that you think gives this way more room to run? You followed this kind of counter sentiment for a while, right?
Yeah, I mean, our upside scenario from our research department today has the S&P at 3,500 and change next year.
End of next year?
Mid next year. Where we see things lining up right now, we're actually more bullish than that. We think there's an upside scenario that could see the market up 20% from these levels.
Okay, that's a rarity. Yeah. We don't often talk to people who say that. They all come in and say, look, you'll be up mid-single digits next year.
Yeah, I mean, this is, if we take a step back, we think this is a generational bull market. We think this is a 30-year cycle, and we need to remember that because it's been a fantastic 10 years. But the mistakes we see investors make today is they're waiting to participate in the rally.
Are you pounding the table with that? Because if you think we really could be up another 20%, people are missing out on the opportunity right now.
Yeah, we are pounding the table, and we're also trying to point to the fact that things like a 60-40 allocation, which has been something clients and advisors have talked about for a long time.
That's
it
stupid,
may be
right?
dead today.
Yeah, I think that's stupid. I think it's been dead a while. You're never going to make enough money if you have 40% of your portfolio in bonds.
Well, and bonds, carry a great deal of risk today. When you point out to clients that a 200 basis point move in rates could take the 10-year down over 11% over the course of 2 years, total return, that's concerning, and so we're pointing that out very strongly.
Do clients listen to that, or is the 60-40 message one that's been beaten into their heads for so long that they're afraid to take any alternative?
Well, I mean, that really, it brings us to the role of individual advisors. There's been a lot of skepticism, of course, around what would be the role of financial advisors over the medium and long term, and I think we just landed right on it, which is it takes a trusted relationship with an advisor to have them help you have the discipline to be in the market when there's a lot that's in your gut and in your instincts that says, hey, maybe I should back away.
Andy, what's your breakdown, your own personal breakdown?
80% plus in equities.
Me too. I'm 100% in equities.
Still?
Yeah. I mean, I have some cash so that I make sure I've got a cushion so that I'm not locked into it, but I don't have anything in bonds.
Right. Yeah. And of course, in my role, naturally exposed, heavily to the story Mike was talking about earlier. And we do think financials are going to be a very strong part of the market over the next few years.